Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 25th COT report of 2013. And of course, as usual, we're going to start off with the changes in commercials position. So here we go. As you can see, we've got indexes on top, starting with Nasdaq, where we had a 38% change in commercials positions. Large changes also in large speculators and small speculators. Don't forget we had a pretty large extreme in Nasdaq for a few weeks. We had that, and basically it was a very bearish signal. And as you can see, it did affect prices. Prices are in a decline mode right now. Of course, the big question: how long would this last? Well, if you want to search for any bullish extremes, you can see that basically when commercials and large speculators were close to the zero line, the last one over here, and then we've got a previous one. And we can search for a couple of more examples that usually could hold prices and push them back to the rally mode, basically. So we're a bit away from these levels, so I would say that maybe the decline could continue a bit more. But of course, the question is, would this bearish signal, the COT change, have any longer term effect? Well, they usually have a shorter term effect, so we may see prices rallying for a few more days and maybe see prices continue the decline afterwards. Okay, let's have a look at Dow Jones. We have the same or similarly large changes in Dow Jones. Here we go. The change size is visible over here, much larger than average. And of course, if we open a 5-year chart, then we're going to see similarly large COT Extreme in the past. You can see it over here. And of course, I would say the same thing applies as in Nasdaq. We would get a very nice bullish signal if large speculators and commercials were to reach close to zero net levels. Over here, you can see how beautifully it marked the end of this decline. I would say to jump over Russell 2000 just to get a glimpse on a energy market, gasoline in this case. Here we go. And you can see that we have also large changes in gasoline, much larger than average. And I believe we are at an extreme also. You can see the COT Extreme, 144 report extreme in large speculators positions. But let's open the 5-year chart, and it's going to be more visible over there that we've got an extreme, maybe not an all-time, but definitely a large one. And whenever we had such an extreme, a relative one, you can see it always mark the end of the decline and put a bottom in prices. So of course we may expect that to happen again. Let's move on and have a look at large speculator COT Extreme. Here we go. We've got copper, silver, gold on top, all of the metals, and we're going to open, of course, copper first, where we have all-time signals both in commercials and large speculators. So huge COT Extreme. All this happening after a decline, maybe not as big decline as we may see in gold, which of course again indicates that copper is a bit stronger. I believe commercials are at roughly 40,000 contracts net long. They've never been at such net long levels, and this is definitely a bullish signal. Of course, you can also find very nice support levels, technically speaking, on the chart. Let's move on and have a look at silver, where we have a 532 report extreme in large speculators and an all-time COT Extreme in commercials. And of course, we're going to open the 5-year chart just to see it on a wider time frame. Here you go. Almost, large speculators are almost net short. That's a very interesting situation we've got there. So bullish extreme, huge extreme in this market. Again, of course, we may start thinking whether we would get a commercial capitulation, a situation when prices would not react to the COT Extreme, and we would get a major decline in prices. That's always the big question. Of course, the majority of the time, COT Extremes do affect prices, so we may say that the chances of getting a bottom soon is much larger than prices continuing their decline. And then we've got gold, where we have a 421 report extreme in large speculators and a 565 report extreme in commercials positions. Here we go. Of course, very much similar to silver, huge extremes, still waiting for prices to end their decline, and we may see prices going higher. Of course, we said that a few weeks ago. We had this extreme. Basically, small speculators were net short. That was telling us a very interesting story, but prices did continue their decline. So it's not an easy situation. And of course, commercial capitulation may also be applied over here. So that's going to be all for this week. I'm not going to show you any more COT charts, but of course you can have a look at them at our COT charts page. If you would like to have a more in-depth and detailed COT analysis, then check out our COT analysis page, where you can add other really useful functions to your table: long-term trend, volume and open interest scores, the COT index. Of course, you can look at market complexes, new COT report types, data types, all sorts of very useful functions. So I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.